Barring Nikkei, which is reeling under a bit of pressure, we are seeing green across the Asian screen.
An ag growth of 24.5% YOY is perhaps the best in 14 quarters.
There is certainly a certain level of volatility around discretionary spending.
Both gross margins and EBITDA margins were at a 7-quarter low, and this at a time when the festive season was something that was expected to lift sentiment, etc.
First take. On expected lines, HDFC Bank is your top mover, up almost about 1% after a good set of numbers, and that's taking the market higher, 60 points higher now on the index.
Seeing a slowdown in discretionary consumption for sure.
The stock up 9%, sales growth of 13% year-on-year in the third quarter.
For the markets, we're just up close to 20 points on the Nifty. The sensex has gained 150 points.
At 4.95 is a very, very big surprise. And I'll tell you, the big surprise is coming actually from primary articles and food. Food is actually 1.25% lower than a year ago. It's a minus.
The net profit has come in at a growth of over 50% year-on-year, and we were anticipating a growth of 37%. NII has grown around 27% year-on-year.
From the day's low, the Nifty banking index has recovered close to about 280-300 points.
Well, that was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, good afternoon. It's more of the same in terms of what we saw all of last week. Actually, the last, 6 or 7 trading sessions. I began this morning, Reema, with a simple graphic which kind of explained the FII flows in India and other markets around the region and returns, dollar returns as well. And the point was that it's very clear what has been happening, at least all of 2023 so far, is that there is a little bit of money. Every day we see that, right? We get that FISL number, sometimes 1,000, 1,500, 2,000 crores. And it's adding up. It's added up to almost $1.5 billion negative this year, which is not small since it's just 2 weeks and 1 day. I mean, so we are very, very early in this year. Whereas a lot of the money is getting allocated to some of the other markets, which is also visible because we have the data. And I think today, perhaps later when we get the flow number, we may see more of the same. In any case, I mean, the Nifty is down about 1% from the day's highest point. So approximately around 1% or so. There is a sharp reversal on the dollar rupee as well. So the rupee was very, very strong. It had gotten to 81.19. That is in dollar rupee, it's the low. For the rupee, it's the high. And we're at 81.725. So it's a dramatic turn, actually. Is it RBI intervention or something of that sort? I mean, there was speculation that at some point they will feel inclined. We don't have any confirmation whether that is the case. But in any case, dollar has come back very sharply against the rupee. Global markets are tepid. US markets, by the way, are closed for a holiday later today, so you won't have cues out of there when we come back. PSU banks are off the highs, but the index is still the top performing index. IT stocks are also gaining. Nothing close to what PSU banks are doing, though. And metals and autos are the top losers that we have got going. 1:1 advances to decline ratio. Although we are nowhere close to this level, I mean, the low from last week, which is 17,761, is still about 80-90 points away from where we are trading. That is the big level on the downside to watch out for in case more selling comes through. On the upside, we've been highlighting the 20-day moving average. With the sell-off that we've seen today, that becomes even further away. It's about 250 points away from where the Nifty is trading at this point in time. Reema, hi.
Hi, so the high today was 18,049. From that level, we've slipped about 160 points. On the way down, the low today was 17,850. And the support for our markets is roughly seen between 17,761, which was the swing low of last week, and 17,774, the 26th December low. So here the markets have made a double bottom around levels of 17,770, give or take a couple of points. This has acted as a double bottom, and therefore it's an important support for our market. The low today is 17,850. So we're still about 80 points away from that level, but watch out. But despite that heavy selling from the FIs, the point you were making, 16 consecutive sessions, markets have not completely collapsed, right? We're still very much in that range.
Yeah.
The range that we've been holding on for a very long time, and that in itself is commendable. But your point about India's underperformance is completely taken. Just take stock of the earnings that we've seen so far. So on one hand, you've got IT, where the earnings picture was not as bad as what the street was fearing. All 4 IT companies have reported their numbers. And the top gainers today are actually from the IT pack. So Tech Mahindra is the big gainer today, where again the street is speculating, are we going to hear from the company about who the next MD CEO is going to be, because CP Gurnani will be stepping down in December of 2023. So there is a lot of speculation surrounding that. But HCL Tech, Wipro, Infosys, these are the 4 top Nifty gainers today. The other set of, the other sector where we've started seeing earnings come through are the banking names. HDFC Bank, good set of numbers. Federal Bank, good set of numbers. Bank of Maharashtra, good set of numbers. Is this a sign of things to come, that banking numbers are going to be good? And you tie that in with the quarterly updates that we've got over the last fortnight or so, and it all seems to suggest that banking numbers are good. But despite that, today the private sector financials are under pressure. So Axis Bank is one of your big losers. Axis Bank has slipped 1.8%. ICICI Bank, HDFC Bank, where the numbers look good, is also down close to about 1%. Some buying is emerging in the PSU banking space. The advanced decline ratio has now also moved in favor of the losing side. For a greater part of the trading session, they were marginally in favor of the gaining side, but today the lines have crisscrossed twice, and again they firmly crisscrossed about 45 minutes ago. So all in all, another down day, Nigel, for our markets, and the Nifty's given up, unable to hold 17,900.
Well, Rima, on a closing basis, I'll tell you what, on the Bulls' wish list will be in the next 55-60 minutes odd, we pull back and at least we conquer the 100 DMA. That's not too far. That's around 25 points away from current levels. That'll at least be a bit of a morale boost. Let's see whether or not that happens. So that's one crucial factor on the Nifty. Well, you'll be mentioning a lot of sectors and stocks as well. My only positive today is that, yes, the Nifty is down 80 points, 75, 80 points odd, but the mid-cap and the small-cap indices, we pull up both of them. The small-cap index, in fact, is trading in the green, while the mid-cap index is doing a relative outperformance. So I like that. That's giving you some bit of hope that the breadth of the market isn't so bad. The PCR, remember, every time it goes to around 1.05 or 1.1, we see the markets pull back a little bit. The trigger is 0.7 or around that level. Once the PCR moves to that level, then in fact we do see some buying. Currently, we're at around 0.78 odd because the call writing has been very, very aggressive. The 18,000 call most active today. 18,100 call very, very active in today's trading session. However, what's giving you some hope is a 17,900 put, which has the highest open interest on the put side. That continues to see some addition. The premium is around 100 rupees out there. So it's telling you yet again that it's in the slot for the bulls around that 17,750 to around 17,800 odds. So keep an eye out on 2 factors. One is a close today. Can be closer around the 100 DMA? And the second factor is, can the PCR end closer to around the 0.7, 0.72 odd? We won't get cues coming in from the United States later today because they are shut. So interesting to see how the data does pan out. But for the time being, 100 DMA on the Nifty, most crucial. Rima?
Okay, and that is 18,077. Thank you very much for that. Let's tell our viewers what we've lined up on the show today. PSU banks continue their gaining streak. Brokerage firm Motilal Oswal Financial Services, in fact, is bullish on PSU banks. Details coming up on the show. PVR under pressure in the back of a Kotak Institutional Equities downgrade. Why has the brokerage firm downgraded PVR? Details on the show. Sula Vineyards is surging in trade after their Q3 business update. And finally, we'll discuss the top stock bets and portfolio calls with our alpha manager for the day, Anshul Sehgal of Kotak PMS.
Okay, well, what should you be doing now in this last hour to trade fresh trades on the Nifty, on the index, or otherwise? Mitesh, hi. Weakness again. When we spoke at 10, I think we still had some 20, 25 points on the index, but since then, all of that and more has been given up. What would you do now?
So, Prashant, in fact, today the beginning setup was slightly positive, but we didn't again sustain above 18,000. I think we kind of opened around beyond 18,000 and then immediately drifted below that. So back to the normal range, 17,800 to about 18,000 remains the range. And for the time being, trading is slightly stock specific oriented. I have a sell on TVS Motor. In fact, you were highlighting the breakdowns happening in auto stocks, and TVS is something which is making a fresh swing low. So keep a stop just about 1,500 for targets from 950 here. While IDFC Limited, and that's one stock which has shown amazing outperformance as well as strength. That's a buy with a stop below 86 for targets of 92.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's get in Dilip Bhatt, market expert who joins us on the show. Hi, Dilip. Thanks so much for joining in. Well, I wanted to ask you about Avenue Supermarts. That's D-Mart. That's struggling in trade. If you got in the IPO, you'd still be very, very happy. But from the recent peak, it's corrected quite substantially. Growth is slowing down out there. Margins are getting compressed as well. And it doesn't have valuation support. What's your sense in it?
I think in the sequence of things what you mentioned, I think the valuation is not very supportive without any doubt. And Nigel, if you see that all the high P stocks in the markets, including Bajaj Finance, have taken it on the chin, and we are seeing that all of them are struggling. I think maybe this quarter performance could have been some kind of an excuse for this small correction that we are seeing and the struggle that the stock price is seeing. But overall, I think as what we see that with the rise in the interest rates and the QT, the P's have to sober down, and which is what possibly could be one of the factors explaining why some of the high P stocks, including DMart, is struggling. Maybe DMart will recover in terms of their performance over next couple of quarters without any doubt. I think these are just a minor blip. They will still continue to be on a very strong growth path. So overall, I think valuation is something that we should take note of, and which is what I think goes strongly against in favor of the high P stocks. That includes DMart.
Okay, point taken. Let's talk about PSU banks. They continue with their gaining streak. Motilal Oswal Financial Services is very bullish on the space. They're looking at an improvement in the ROAs of the PSU banks. Abhishek is here with the details. Abhishek.
Well, Rima, as you mentioned, Motilal Oswal has released a note on PSU banks wherein they are titled it the homecoming of ROAs or return on asset. So profitability of the top 7 banks that they cover, or it is under their coverage, has been improving to an estimated 90,900 crore as of FY23 from a loss under 60,000 crore that they had in FY18. So top 7 PSU banks under their coverage have delivered an average ROA of 1.1% over the 10 years, that is FY04 to FY13. This compares to below 1%, they have seen for some of the private banks as well in the same period. So they estimate the top 7 PSU banks to report a PAT of about 1.3 lakh crore, that is 1.3 trillion in FY25, which compares to a loss of little under 60,000 crore that these banks had reported in FY18. So this will drive the ROA and ROE to about 0.9% and 14.2% respectively. So adjusted book value for these PSBs is likely to grow at an average rate of 12% to 23% range versus 14% to 19% that they have estimated for top private banks. So consistent performance on delivering healthy return ratios can lead to further re-rating of the PSU banks. Their top picks are SBI, that is State Bank of India, Bank of Baroda and Canara Bank. Back to you.
Okay, all right. And of course, I mean, Abhishek, thanks very much for that. Names like PNB and others are still nowhere close to getting anywhere close to that one-time book level. So, I mean, if you believe that things are going to get better and they should trade at least one-time book or around there, I mean, there could be a lot more to go, of course, if the fundamentals continue to improve. Dilip, I'm coming to you for a view on PNB, but let's just PNB and PSU banks, but also let's bring in Sonia, who's standing by. We're going to talk about PVR. Now, that is the big one, which is selling off about 4-5%. And there is a note from Kotak Institutional Equities. They've downgraded their rating. Price target's still higher than the CMP. But what are they saying, Sonia?
The last time you went to a theatre, but it was a long while back that I did, and Kotak mentions in their note that consumer preferences are changing because of the influx of OTT and there's so much entertainment outside of theatres. The occupancy levels have fallen quite a bit. In fact, Kotak has downgraded PVR to an add from a buy. They've slashed their target price. It's still above the current market price. But what they say is that, of course, the positives are that the NCLT has paved the way for, the merger of PVR and Inox that will create a multiplex behemoth with better bargaining power. However, the overarching theme really is unabated weakness in the Bollywood box office collections post the pandemic, suggesting that there's a major change in consumer patterns and behavior. The total number of Hindi films crossing 100 crore box office collections fell to just 7 in calendar year 2022. This compares to 17 films with more than 100 crore box office collections in 2019. Let's move to 200 crores now. Total number of Hindi films crossing 200 crore box office collections fell to just 5 in 2022 versus 7 in 2019. So there is a low tolerance definitely for mediocre Bollywood films, and that is also perhaps because of the paradigm shift that we are seeing induced by OTT, which is weighing on occupancy. So Kotak Institutional Equities has gone ahead and scaled down their earnings estimates for PVR. They've trimmed their FY23, FY24 occupancy assumptions. They've cut EBITDA estimates by about 15 to 38%. They've cut the face value by 16% to 1850, which implies a 12 times EV to EBITDA for FY24. Back to you.
All right, Sonia, thank you very much for that. That's PVR for you. It's an interesting note, which Sonia highlights. Dilip is still with us. Dilip, so your views on both, but let's talk about the public sector banks and whether you think there is still more to go. Abhishek kind of put out what Motilal is saying, but what are your thoughts and what would you want to buy now in that space if you would want to?
Sure. I think as far as the PSU banks are concerned, we all know that it has already run up quite a bit because they are more or less the slate is very clean in terms of the NPAs, and possibly the credit growth and the NIMs and the NII growth all are getting reflected right now. So I think all of them are looking pretty robust at the moment, and the momentum possibly will continue for some more time to come. And which is what we can see that still, as what you very rightly said, that PNB is still far away from its book value. So there's sufficient steam. So I would say one caveat out over here, I think there will be a momentum play, yes. It will move up in next 6 months to 12 months, yes. But whether there will be a secular long-term buy into these banks, I think the principal question that still remains in the minds of everyone is whether the DNAs of the banks have changed. And that is very difficult to predict in the long run. And I'm not too sure whether the DNAs of the banks change so easily. And that is what is capping the price to adjusted book as well as the multiples. So taking all this into account, I would say, yes, we must play for a momentum for next 6 months to 12 months and possibly 15 months. But beyond that, I think taking a long-term view is very difficult as far as I am concerned. And I would say that in the order of pecking, SBI still looks the best and the safest. And then, of course, I would say that something like a Canara Bank also looks pretty interesting. But there are small banks away from the PSU banks. For example, there is, I would say, a South Indian bank looks pretty interesting. Karnataka Bank looks pretty interesting. So I think away from the PSU bank, some of these banks also look very interesting from the current levels.
Dilip, thank you very much for joining in. Motilal Oswal's analysis versus 7 PSU banks: State Bank of India, PNB, Bank of India, Bank of Baroda, Central Bank, Union Bank and Indian Bank. And amongst these, if you look at the price to book value, PNB is the cheapest at 0.6 times. FY24 price to book 0.6 times. State Bank of India is at 1 time, while Indian Bank, Union Bank and Central Bank and even I think Bank of Baroda, that's at 0.7 times price to book. So those are some of the cheaper stocks when it comes to valuations. We'll slip into a break on that note. Here is something that you, our viewers, must take note of. CNBC-TV18 and the National Stock Exchange have come together to promote investor awareness through a special campaign, Informed Investor, that empowers you to make the right decision with your money. Nothing in life is guaranteed, but many investors fall for guaranteed returns gimmick. A smart investor always avoids investing in such schemes and is aware that they are illegal and must be reported to the exchange. Any investment in such schemes is not eligible for compensation from the exchange. Hence, it is wise to avoid investing with anyone promising guaranteed returns in the securities market. Welcome back. Markets inching lower now, pretty much back at the low point of the day, approaching 17,850, 90 points down on the Nifty, while the sensex has lost 260 points. The earnings season is gathering pace and the budget is now approaching. We're now inviting Anshul Sehgal, the head and executive vice president of Kotak PMS, on the show now. Anshul, it's been a rough start to the year, right? Nifty is down 1.5%. We're massively underperforming the rest of the emerging markets. The earnings picture has not been so bad so far, but Indian markets have just fallen out of flavor. What have you made of the start so far, and how do you expect the near term to pan out?
Hi, thanks for having me. You can't expect Amitabh Bachchan to give hits, again and again. and there will be a time after, say, 10 hits where there will be a flop. And India has been the Amitabh Bachchan of emerging markets, really. If you look at the last year, India was up 3%, while if you compare it to some of the other emerging markets as also developed markets, all of those markets were down big. Say, take the case of NASDAQ, it was down 25-30%, S&P Dow were down 20%, China was up in the last quarter, but it was still down meaningfully from the start of the year, as also the other emerging markets. And some of that outperformance is being given up in this new start to the year. It is also on account of the budget. Some nervousness exists in the market prior to the budget, and that really is getting reflected in prices just now. For the long-term investor, this is a time to really build portfolios. Clearly, a bout of uncertainty is welcomed by the long-term investor because it is only in volatility that this investor gets the right prices. And we are seeing that play out today. Really, if this continues for some time, there will be a slew of opportunities available in India.
Okay. All right. Hi, Anshul. Good to speak to you in this new year and wishing you a good year ahead as well, Anshul. Anshul, you know, on the headline index, we could be in for a period of volatility, maybe some consolidation as well. But what about the mid-cap and the small-cap indices? The last year, everyone was only talking about the way India was outperforming. That's the headline index. But there was some pain in select stocks in the broader markets. Do you believe that 2023, there will still be some pockets of strength from the mid and the small-cap space? And more importantly, if you could name a couple of companies, you know, with due disclosures that you'll have been recommending to clients or you'll hold it. Give us a couple of ideas.
Nigel, you're right. Thanks for having me. And hi, good to be speaking with you. You're right. Last year was a year where small and mid caps corrected. There were many which were down as much as 30, 40, 50%, and these were quality companies. The key reason for that to play out was that there was inflation last year, and because raw material prices were going up, gross margins were kind of compressing, and that was leading to these stocks actually coming off. Now, clearly, commodities have corrected, and in the current year, we will not see the same amount of pressure on gross margins. In fact, we could see an expansion of gross margins in the current year. So stock-specific, sector-specific, there will be opportunities. We do believe that for the discerning investor, this will be a year of differentiation. You could well be in those right pockets and differentiate yourself in the current year. Some of that played out last year when you were falling less than the rest of the market. And in this year, it will be on the other side where you may actually rally more than the rest of the markets. Some pockets that we are looking at and where we find opportunity are financials, particularly NBFCs, which have been forgotten. Housing finance NBFCs, where the liability side is kind of fixed on prices, and the asset side is getting repriced because of interest rates moving up. It is there that we are seeing margin expansion, and we find opportunities such that prices have been kind of flat for the last 9 years, while their balance sheets have tripled. This is an anomaly, as we saw in the PSU banking space over last year, that anomaly got corrected. We believe that this anomaly, even in the NBFCs, will get corrected or should get corrected in the current year. We find opportunity also in defense indigenization. There are a number of companies, both PSU and private, large and small, where this theme is seeing significant tailwinds on order booking. And as a result, companies have outlooks which they haven't seen over the last, since inception actually. And so we find opportunity there. The sugar cycle is extremely well poised at this time. For the first time, at least in my working life, I've seen international sugar prices higher than Indian sugar prices. That to me is on account of how the world perceives the demand-supply scenario to be. In our judgment, for the last 3 to 4 years, monsoons in this country have been quite robust. And it is, again, quite an anomaly that you've seen such consecutive monsoons, good monsoons in this country. If there is a failed monsoon this year, then sugar prices globally would be on fire, because India is the balancing figure in the global sugar trade. As much as 8 to 10 million tons of sugar is exported from the country into the world. If there is no room for that export to happen because of failed monsoons, then sugar prices globally will be on fire. And we anticipate that chances of that happening in the current year are high. Capital goods, because of PLI and other manufacturing themes, Make in India, Atmanirbhar, etc. Significant tailwinds there. Real estate, again, tailwinds. These are some pockets where we find opportunity. And we think that because of the correction in mid and small caps last year, immense opportunity has emerged in these pockets. And these are mostly in the mid and small cap space.
Anshul, hi, good afternoon. Sorry, the first sector that you said where liability rates are fixed and on the asset side it's getting repriced higher. Sorry, you meant which subsector within the financial space?
Hi, Prashant. I was referring to the NBFC, home finance NBFCs in the financial space when I was talking about that. There are a few companies where this phenomenon is playing out just now, which is why NIMs have tailwinds. And while there are also volume growth opportunities, but even if that wasn't the case, because of NIM expansion, you would see upsides on profitability, which are absolutely not reflected in valuations today. I mean, in a market which is trading at 20 times price to earnings, Nifty EPS expected is $900. Nifty is at 18,000. In a market like that, you're getting companies at 5-6 times price to earnings with growth trajectories of over 15 to 20%. That is not likely to sustain for too long.
But on the liability side also, I mean, costs will go up, right? So even with a lag, or for some time they can be where they are, but eventually that will also move up, right? So the opportunity for NIM expansion would be temporary in most cases.
You are right. Although in that period, while incremental liabilities are getting repriced up, the NIM opportunity will be. You see, what happens is that if you had NIMs of say 3.5% till some time back, and because of prices coming down, that got corrected to 3.2, 3.3. First leg up will be higher than 3.5, and thereafter maybe it will get normalized at 3.5. But even that number is substantially higher than the current NIMs. So the normalization of NIMs itself will offer significant uptick in profitability.
All right, Anshul, thanks so much for stopping by and sharing your thoughts. Wishing you a good year ahead, and we look forward to hearing your thoughts as well. You still believe that there are select stocks and sectors that will do well, particularly the breadth of the market. Well, for the time being, though, the markets, well, we're still down close to around 80 points. Tata Motors, Tech Mahindra, they have moved higher. Hero MotoCorp as well has spiked up as we speak. So it's a good time to turn our attention to D-Street Chatter. Nimesh is with us. Nimesh, tell us, what are you picking up in terms of flows and how are you reading the market action?
Hi, Nigel. So, the market, I mean, it's at day's low. The screen is looking bad. But contrary to what the screen is looking, the feedback is there is a small ETF buying at a leading FI desk. That's the overall feedback. Even last week, we spoke about relentless selling from the FIs. That was largely because one of the leading hedge fund was unwinding India positions. Even last week, the feedback was that, there was a $500 million of ETF buying in the India market. So that the ETF flow seems to be on the positive side. That's the overall feedback. In terms of sectors, today the financials are under pressure. But again, it's a mixed view within financials as well. Some of the large private banks are under pressure, but the PSU banks are well bid, the insurance companies are well bid, and that's where the flow seems to be within the financials as well. The other sector which has done well today is technology stocks. Most of the technology stocks are well bid today, and there is a bit of buying at lower levels in the technology names. That's overall from a flow point of view. Again, from a Nifty point of view, 17,800 seems to be a very good, strong support level. So that needs to defend for the bulls to see a bit of a rally from here. But largely, while the screen is looking bad today, the feedback contrary is there is some bit of buying interest largely ETF flows into the India markets today.
All right, Nimesh, but there have been select large trades that have taken place and some buzz on select stocks as well. What are you picking up?
So in terms of individual names, the first stock on my list today is HDFC AMC. There was a large block, 15 lakh shares, close to 0.7% equity, and I believe a leading FI was a seller in today's block deal, so disclosure will be important as far as HDFC AMC is concerned. The second stock is Manappuram Finance. That stock was in the green for a large part of the trade. It's cool off a little bit. But again, there the feedback is there was buying interest from larger FIs, and also there is a Morgan Stanley tactical buy on Manappuram Finance, indicating that quarter 3 will be the last worst quarter, and from there the things will improve. So that's Manappuram Finance. And the last stock is Axis Bank. I spoke about mixed flows in the financials. Axis Bank stands out in terms of selling pressure from the leading FIs. So that stock is under pressure today, and the volumes are on the higher side, purely on back of FI selling, and that's why Axis Bank is under pressure.
Okay, thank you very much for that, Nimesh. We'll slip into a very short break. On the other side, we'll tell you what you can buy today to sell tomorrow. Calls coming in from our technical experts.
Welcome back. You're watching our continuing coverage here from Davos 2023. It is minus 9 degrees at this point in time. To warm things up, joining me is CP Gurnani. CP Gurnani, always a pleasure. It's great to have you join us here in Davos. What's the mood like? I mean, the expectation was that it's going to be a very challenging environment for tech. We've, of course, seen not you, but the other peers of yours announce their results, and it wasn't as bad as was expected. In fact, much better than people had expected. What's the mood like as you speak with people today?
So, Shireen, good to be back in this cold, snowy Davos. So let's step back for a minute. Davos has always been discussing issues which are relevant. Now, typically, we may say fragmented world, but the reality is the world has all similar challenges. Whether it's energy crisis, supply chain, inflation, the challenges are almost similar. And my belief is that 50 heads of the states, about 2,000 plus delegates, out of them 600 CEOs, getting together here and looking at the glass half full, not glass half empty. I think it's a great opportunity for all of us to discuss what I would say the common challenges.
You know,
yeah, go ahead.
No, you're talking about opportunities, and I want to pick up on what the market seems to be smelling at this point in time in terms of opportunities, specifically on Tech Mahindra. I'm being told that the stock is one of the top gainers today, Mr. Gurnani, on the back of buzz that you are going to be prepared to announce your successor very shortly. Is there truth to that?
I mean, I don't think it is the succession part because, as you know, the communication to the stock exchange has been very clear that I am on the saddle till December 23, and the successor would be a CEO designate. There is no immediate announcement, so we will have to wait for a little while. I think more important is that most of the industry has seen, and you've seen a lot of results come in, most of the industry has seen is that the consumption of technology continues to be high. Yes, some sectors have slowed down, but there are some sectors which are picking up. For example, travel and logistics was slow, but it is now picking up, and technology sector, which had to, invest a lot to meet the demand of a consumer who was sitting at home and consuming technology. So I think it is just a method of saying that whether it is a challenge on sustainability or climate control, or whether we are talking about recalibrating the supply chains, technology will play a key role as a glue to bring all disparate solutions together. Sometimes it will define the standards. And being one of the large companies, 90 countries, 160K people around the world, I think the market is probably recognizing that.
Clearly the market is recognizing some future potential that they want to bet on at this point in time. But just wanted to get one clarification. So you're saying that there is no imminent announcement as far as succession is concerned?
The announcement will definitely happen. As I said, there will be a CEO designate, but there is no immediate announcement.
Okay, no imminent announcement. Let's, I want you to step back a little bit, and you were talking about the opportunities for the tech landscape and for the tech world. For a company like Tech Mahindra, as you foresee the future, as you look at the next 5 years from here, what do you believe the roadmap will have to look like, especially in terms of being able to get to the margins that you are seeing your peers being able to deliver? Is it largely going to continue to be organic-led? Are you now thinking about inorganic opportunities as well? What will the road to especially margin recovery be?
So, Shireen, few things. Number one, Tech Mahindra as a strategy will continue to look at inorganic acquisitions. But as I've shared with you in a few other quarterly announcements, for the time being, we are going to consolidate and create value with the acquisitions that we have already done. But if you ask my board colleagues, they more or less remind me that never waste a crisis. In 2009, when there was a crisis, we ended up buying Satyam.
Yeah.
So my board question, that means my board members actually asked me, what are we doing and is there an opportunity during this crisis?
Is there an opportunity that you're looking at?
Not at the moment. As I said, my focus is organic growth. The leadership team will obviously be opportunistic, but there's nothing that I can say that we are looking at.
Okay, so that's as far as acquisitions are concerned. But what about margin recovery?
I think it's a constant effort. We have now laid a roadmap where we are looking at putting in all the operational levers, and we think every quarter you would see a definitive improvement in our margins.
Taking them to where?
I mean,
will you be on par with where your peers are? And by when?
We have never given any guidance, so I don't want to start a new trend today. But I can only tell you is that we are conscious that there are a few fault lines in the way we have operated in Tech Mahindra. There are a few operating levers that we need to work on, and both fault lines and operating levers we are now working, and hence you will see a definitive improvement every quarter.
Okay, a definitive improvement every quarter, and I understand and I appreciate that you cannot give us a guidance, but you talked both about the fault lines as well as the levers that you hope to be able to maximize on. Can you identify or articulate for me what the key would be on both fronts, the top 3 fault lines that you need to fix and the top 3 levers that you need to leverage?
So operating levers are very simple, that my subcontractor hiring compared to anyone else in the industry is one of the highest. Obviously, that means my internal supply chain engine has to become a lot more efficient. Number 2 operating lever is on-site offshore mix. I think we need to work on that area. And number 3rd is our geographical mix in operating matrix, because we do a lot of business in low yield markets and we need to optimize on that, and that's why I'm saying that these are my operating levers. In terms of fault lines, I would say that there are some processes, there are certain areas where there are duplication of work. When you're been acquisitive all these years, you tend to have a lot of duplicate processes and not, one source of shared services. So I think my fault lines are not doing the integration at the nth level of our acquisitions, and some processes which are duplicate, and I think we are fixing it.
You talked about the geographical mix that you want to change and move higher up the value chain in terms of higher yield markets. When can we see that transition take place? I mean, what is the kind of broad timeline that you're looking at by when you believe you will be able to leverage on that opportunity and that lever?
I mean, it's already work in progress. I think 6 quarters, we should have completed 70% of the work. As you would have guessed, why am I not definitive about 100% is, there is never, this is not going to be where we will never make a mistake. We will make some mistakes. Sure. And number 2 is, there are customer commitments. By the time they sunset, it could be 6 quarters. I mean, I'm not going to walk away from a customer just because it is not exactly fitting into our strategy at the moment. We are a service organization. For us, customer experience, customer satisfaction is very, very important.
So 6 quarters by when you believe 70% of what you hope to be able to do in terms of moving these operational levers you will get done, especially moving to high-yielding clients and high-yielding markets.
That's true.
What else are we likely to see change as far as strategy is concerned in light of the current global environment, the competitive landscape, as well as your learnings on leveraging your strengths and reducing your vulnerabilities?
I think, Shireen, you know, I'm very proud of what we've achieved in terms of anticipating the market demand. The market demand on blockchain, Web 3.0, Metaverse, and on 5G. That Tech Mahindra is now one of the fastest growing company in customer experience management. We did an acquisition of an agency called Bond in New York, and now that business has grown almost 300% in the last 3 years. So I think we'll continue to focus on customer experience, because remember, it doesn't matter which market you are in. End of the day, the ultimate customer, when he pays for a good, then only the economy does well. So we are very proud that we have done the right calls in technology. We have done very, very well on customer side, and we will continue to focus on providing better services to our clients.
Okay, all right. That's the top management at Tech Mahindra. Rima, so on that point about whether an announcement is going to be made, nothing immediately, but it says that it's going to happen. A CEO designate, his term ends in December of this year. So he's going to stay on, maybe mentor the new chap. And,
so typically we do see, right, that the companies announce a CEO designate about a couple of months prior, right? 6 months, 7 months. The street was anticipating that perhaps it would come as early as this quarter's earnings announcement, right? Post that. So sometime in early February. But going by what he has to say, that it's not imminent.
It's not imminent, but yeah.
But we can quibble, right? What imminent means. Does it mean tomorrow, or does it mean even a fortnight?
Absolutely. I mean, Tech Mahindra, the stock is up about 3%. So it's at the day's highest point, even as the market is kind of, not doing very much. It's down 60 points, 17,894 or so. Mitesh is with us. Lots happening in the broader space. Mitesh, welcome back. In terms of, short-term buy today, sell tomorrow trades, do you have anything?
Prashant, one Tech Mahindra itself, I think I was looking at the price chart as the discussion was going on. Very good price and volume breakout here. I think signs of some kind of bottom formation on. So that's not a BDST, but I would say even take a slightly trading kind of a call. Keep a stop below 1019 here. Look for a test of 200 average, which is around 1067. That's the first target area. And the other one is L&T Finance, which is more of a BTST call with a stop at 94 for targets of 96.5.
Any thoughts on PVR, Mitesh?
So, Prashant, PVR is something, which was on the limelight few days back as it made two lows around the levels of 1620, 1630, but then failed to clear past the earlier highs of 1750 here. If you look at the last few days of data, on the 4th of January, we had the same high of around 1771. 12th of January was 1766, and then yesterday or Friday rather was 1769. So I think a closing about 1770 would be important for the stock to signal some kind of a breakout.
Okay, all right, Mitesh, thanks for that. Well, Mayuresh Joshi as well as William O'Neill joins in. Hi, Mayuresh. Mayuresh, you just heard Mr. Gurnani detail his plan going ahead. They want to focus on organic growth. They'll be announcing a CEO, but it's not in the near term. Some part of the street believe that early Feb we'll be getting that announcement, but that's not likely to happen. What's your take on the stock? It's still close to 35-40% away from its recent peak.
It's resting very close to its pivot levels. Though on the EPS rating, some strength needs to be derived on the OG ratings. I think 2-3 things that Mr. Gurnani mentioned, specifically in terms of expansion of the pivot margins. In the previous quarter, pivot margins came close to 11.4%. Out of all the levers that he mentioned, which included reduction in subcontractor costs, utilization level improvement, I think that is going to be the biggest lever for the stock itself. The all-time high in terms of tech mining was close to 88%. So they're able to get that in terms of 5G capex expense for telecom, stroke, infrastructure across the globe. I think that utilization level can act as a big lever. The second element is also the exit of low-margin businesses. They've already exhibited that in the previous 2 quarters, and that should lead to better EBIT margins going forward as well. So I think a better EBIT margin performance expected in the next few quarters. From a valuation stack-up, Nigel, at this point of time, I think it's one of the more reasonable stocks within the IT space. Even if you assume an EPS of almost 90 odd rupees for FY25, it trades almost at 11.5 odd times. So I think there is a sufficient amount of opportunities for the stock itself, stretching at the pivot, as I said. So yeah, I think the numbers are good. And it is able to cross 1100, which is one of the key moving averages for the stock. There can be momentum in the stock, aided by the numbers.
Welcome back. Looks like we're ending around that 17,900 mark, off the day's high, but also off the day's low, down close to about 0.3%. In conversation with Mayuresh Joshi and Mitesh Thakkar. Mayuresh, Varun Beverages is a stock which is doing quite well. There was a note from Jefferies today, and the stock has been an underperformer. It's lost about 16% from its 52-week high. Do you think that's an opportunity for people to enter in?
So numbers have been very solid, Reema. If you probably look at the number of cases they've sold, 670 million odd compared to 570 on a year-on-year basis. EBITDA margin has seen a significant amount of stability, landing around 22% at this point of time. And the sheer volume growth, which is continuing both for its India operations and the operations in Africa as well, I think that continued volume momentum might very well sustain earnings growth going forward. The second element, obviously, in terms of the product mix as well, carbonated drink 70%, water 25%, juice 5%. So that probably holds up the entire value proposition when it comes from a product perspective. Third but not least, I think expectations in terms of stocking up in the next quarter for the summer season ahead. And a lot of their products are getting sugar-free as well. A lot of energy drinks coming into the forte as well. So yes, I think momentum might continue. Saw a significant amount of profit booking. But that was expected because the stock had run up quite significantly over the past few weeks.
All right, Mayuresh, thanks very much for that. There's, 3 minutes to go for market closing. So we'll start wrapping up things here. I mean, neither down 60 points, but if you just look at what dragged the market down, not very much. I mean, down 1.5 in that range. So nothing big per se. Although market breadth overall in the broader space was negative, which we'll come to in just a bit. PSU banks, IT and energy were the 3 sectors. So the Nifty PSU Bank Index was the top gainer. It was followed by the IT Index, and it was then followed by the Energy Index. These are the 3 pockets which largely did well, top down. The losses came through in the Metals Index and the Auto Index. These were stocks which were lower. In large caps, I think, actually, even though the index was down, what stood out was IT doing well. So Tech Mahindra, Infosys, HCL Tech, Wipro, between 1% and 3%. Tech Mahindra 3%, and then, Wipro up 1%. That's basically, at least on the large cap space, what stood out more than what was down. But broader markets, lots of action. Reema.
So let's take you through some of the big movers. Sula Vineyard, strong Q3 update, 15% up. Just Dial, 40% revenue growth. Cash in the books, 4,000 crores. Stock ending with an upper circuit of 10%. Varun Beverages, Jefferies calls the note bubble up. It's a high conviction buy, target price 1540, 6% higher on that. On the losing side, DMart under pressure, PVR on the back of the Kotak institutional downgrade, losing ground. PSU banks had a good session, UCO Bank, IOB, Union Bank gaining between 5 to 6%. On the losing side, you also had softness on a couple of these fertilizer names. Fact, Nagarjuna Fertilizer ending down 5%, and Nykaa on very large volumes slipped close to about 5%. Nigel?
Well, that's right. There were a few more gainers actually from the broader markets because the small cap index, in fact, did very, very well in today's trading session. Some of them we don't talk about very, very often. Let's run you through the list. Ratan India Enterprises, that stock was up close to around 15%. Just Style was locked. Adani Green was up close to around 10%. SEPC, well, that stock was up close to around 10%. You had Bharat Agri as well, that was up in today's trading session, was up close to around 5%. Easy Trip was up close to around 8.5% or thereabouts. So those are some of the big gainers actually from the broader markets. Let's pull some of these stocks up. SCPC as well, the resolution plan was approved, as well as they made some payments as well. That hit the exchanges earlier today. Bharat Agri was another one that did well. Imami Realty as well did pretty well in today's trading session. So to sum things up then, well, the Nifty ended with a bit of a cut of around 65 points approximately. The Nifty Bank as well was down 200 points odd, but there were select stocks from the broader markets that did pretty well. Rima?
Okay, awaiting the final tick. We're currently just below 17,900. Remember, the U.S. markets are shut today on the back of Martin Luther King, so no cues coming out of the U.S. markets. And tomorrow, the big earnings will be from ICICI Pru as well as ICICI Lombard. No Nifty company reports numbers. There goes the final tick, 17,891 on the Nifty. So just shy of 17,900, 65 points lower on the Nifty. The sensex down 180 points. That's a wrap on Closing Bell from the entire team. Thank you for watching. Don't go anywhere. Our Monday special, Wizards Off the Street, comes up.